Singapore is 3/4 of the way closer to its target of importing 4 gigawatts of low-carbon electricity by 2035. Now, this would power nearly 1/3 of the country's energy supply. The Energy Market Authority has granted conditional approvals to 5 projects to bring in 2 gigawatts of the cleaner power from Indonesia. And this comes on top of a 1 gigawatt project with Cambodia. The projects involve setting up plants in Indonesia for solar, photovoltaics and battery energy storage systems. And the hope is to start operating them from the end of 2027. And they're also looking at installing subsea power cables. The approvals aim to help Singapore reduce fossil fuel dependency and for low-carbon electricity imports to account for 30% of its total energy supply in 12 years' time. EMA says that they also affirm both countries' commitment to cross-border electricity collaboration and go towards making Singapore's energy supply more secure and more reliable.
Today, we are about 95% of our power comes from burning natural gas. And with low carbon power imports, we are able to diversify away from natural gas. This also enables us to decarbonize our power mix by tapping on low carbon power imports from the region. The greater amount of supply will also bring about competitive benefits to Singapore's power market.
For more on this, we have with us Dr. David Broadstock in the studio. He's Senior Research Fellow and Energy Transition Lead at the Sustainable and Green Finance Institute at NUS. Good evening to you, Dr. Broadstock, and thank you for coming in.
Good evening.
Right, so conditional nods to import 2 gigawatts of low-carbon electricity from Indonesia. Sum up for us, if you will, the exact significance of these imports.
The significance, I think, is high. We have a strong need to complete an energy transition. We're aiming for net zero within the economy by 2050, and this will not be easily achieved. We're in a scenario where we're expecting demand for energy to continue to grow, and even just earlier this week, we saw that there may be pressure to have more gas. And so anything we can do to diversify our energy supply, make it clean and renewable, will certainly be very welcome. And of particular importance here, I think, is that a year ago, we were looking at 4 gigawatts potentially coming from Australia, and we may still get some coming from Australia with time. But a lot of uncertainty was created because of events surrounding the projects there. And what this does is it creates certainty in a vacuum, and that will help everybody in the sector plan better.
Well, you mentioned the goal of net zero by 2050, because we've got another goal, which is an import target of up to 4 gigawatts a year by 2035. Now, at 2023, now we are, as we just mentioned in our headline story, three-quarters of the way there. How do you assess this progress?
I think we have to be very optimistic about this progress. This tells us that we're certainly making solid progress towards those targets. It also creates an opportunity to be thinking more ambitiously. If we can get here at this point, if we're potentially 8 years ahead of schedule with a large quantity of that supply, we know with good relations with our neighbours that we'll be able to scale this up quite significantly if the conditions are right for everybody.
Dr. Broadstock, you mentioned the potential with Australia. It possibly might be revived, that particular deal, to sell solar power to us. But we've also got tie-ups with other companies in Indonesia as well, in Cambodia, Laos, on top of that. What do you see as other potential key electricity markets for Singapore?
Well, I think making sure actually that we do keep a strong eye towards Australia will be important. In terms of electricity, we could be thinking more generally about utilising a broader grid that covers the Southeast Asia region, the ASEAN region. And then in addition to this, we also need to be mindful that in addition to electricity flowing, we still need to build out other technologies.
All right. Other technologies, that means just beefing up our imports. That is just one part of enhancing energy security in Singapore. Other things clearly need to be done as well. What are the other key factors that we need to see being strengthened?
Well, the key thing for strengthening energy security from Singapore's perspective today is to not be totally dependent on one source of fuel for electricity. Today it's 95% or so natural gas. So we need to modify that. And we are exploring the potential for geothermal energy within Singapore, and it will be very important to see what that true potential is. And I gather we're still needing to conduct some additional exploration there. There are other fuels like hydrogen and ammonia which are being explored, but they may be some distance in the future just yet.
So this is a two-pronged approach for Singapore, isn't it? It's going green, but also being energy resilient as well. And as you say, sort of calibrating the various streams of our energy supply so that it's stable. I mean, that's an important part of it. Cost is a factor as well. We want to keep those costs down. Do you see any particular moves impacting power prices for the Singapore consumer with all of this?
It's a little difficult to predict that just yet. We have conditional nods, and so many of the engineering parameters will need to be established to really get a full sense of what the actual costs will turn out to be. I think we are at a point where the carbon price is going to be increasing to reflect the fact that actually in the past we were not paying necessarily the full price that we should have been. And we should be mindful of this. Nobody wants to see higher prices. Of course, we all want the lowest price possible. But there's an argument that maybe we didn't pay enough in the past as well. And so I'm optimistic that we'll find the lowest price that we can and the fairest price that we can.
Let's hope that sweet spot is reached eventually. Dr. Broadstock, thank you very much. Dr. David Broadstock there from the Sustainable and Green Finance Institute at NUS.